simply to, well, first, the assumption first is that you own 100 shares
Yes.
of something or several hundred shares. They have to be in multiples of 100, yeah?
Right.
And once that happens, then what you can do is sell against that thing that you own.
Right.
So it's no longer a naked call or naked put, something like that.
Right.
But you recognize that what that naked part means. It means that you're selling something that you already own. If it's naked, you don't own anything. So in
Right.
this particular case, since you do own 100 of something,
Yes.
and what you're trying to do is sell
As
well,
collateral. Like,
well, actually, you know what? A real example would be much better. How about that?
okay.
Let me log in here real quick so that we can address that. What's an example of one of the stocks that you own outright?
Let's use Apple as an
Apple
example.
is good. All right, let's use Apple. Okay, and bringing up Apple here. Apple's it's a good fruit company, right?
Yes.
Yeah. Here we go. Yeah.
And I'm sorry to just jump in with this, but you
Oh,
asked.
oh, this is cool, man. I love this. Yeah, this is great. This is awesome. This is awesome. I do like Apple. Apple is it's okay. They have enough of my money, by the way.
Yes, mine too.
Yeah.
That's why we got to get it back
We
somehow.
will. We will. Yeah. So let's see. Apple. So I just opened my Thinkorswim here, and I'm going to go ahead and share my screen. We'll try and build an example out of this.
Okay.
Okay. So you can see my wonderful screen over here, right?
Yes.
Awesome. I'm gonna make it big so that we can look at that. So currently it's trading at 177.79, right? 177. We think it might fall down a little bit, cover this gap, do its thing, and so on and so forth. But in the long term, we expect it to actually go upwards. You believe that?
Yes.
I think so too. It's a good, strong company. It's a $3 trillion plus in valuation. So it would be a good stock to bet your last back on. Well, maybe not your last one, but the second to the last one.
Yes. Second to the last.
Second to the last, yeah. So you own some shares that you can keep for a really long time. You can give to your neighbor, your favorite organization, your kids, and friends. And let's say you own 300 of them, right? You own 300 of them.
Yes.
So you're well vested, and maybe you bought them. You bought them a while back. Say you bought them at 150. What do you think? Is that a good price?
Yes.
All right. So you bought 300 of them at 150. So you are good for $45,000. That's how much they're worth. That's how much you paid at that time. Today, they are now worth 177 times 300, which be about 53,100. Do you follow that math so far?
Yes.
All right. I'm simply doing 300 times 177. That's just the current value. And so your profit is the difference between that and 45,000, which is roughly 8,100. And you feel that you want to make more money. So this is where the covered calls come in, right?
Yes.
So imagine if I went over to the options chain and I decided I am going to sell some calls. Now, what do we know about selling calls?
As far as,
What is the strategy? When you sell a call, what is the strategy that you are trying to do?
oh, that the price will go down or stay beneath?
the price will stay beneath a certain point, right? So if I sell the 200, I'm saying that I don't think price is going to go above 200. It will in fact stay below 200. Yes.
Yes.
Okay, but 200 is very close. We were kind of, bumping up against it just the other day, right?
Right.
198.23. So I might decide to go a little further and say 220, but let's see how we decide that, right? So I want to buy, oh, sorry, I want to sell. When you're selling, you sell as short an expiration as possible.
Right.
Anywhere from zero, that's the shortest that you can sell, all the way to, I guess, ad infinitum, right? But let's say by 18 August, which is what day? Is that Friday next
Next
week?
week. Yes.
That's next week, right? So just make sure about that. Let's add a small widget over here. Do we have a calendar?
Yes.
It does
No,
not
but
have
it
a
is.
calendar. It is?
I know that the 18th is next Friday.
Okay. All right. All right. Then that's cool. We'll just go with that. So by next Friday, we are saying we're proposing that maybe let me go ahead and increase the number of strikes here. We think that we don't think price is going to hit 215.
Right.
Yeah. So right now there's no money in there. This is the bid column. I'm looking at the bid column.
Yes.
So we might have missed that one. So let's
Okay.
go with the following week, because when we do this, we want to do this with a healthy amount, right?
Mm-hmm.
So I'm going to go to 25 August, and again, there's not really much premium over here, but there's this may not be a good stock to do covered calls.
Right.
Yeah, because you're picking up $1 here or $10. That's not enough to even
Right.
for a train ticket. So let's go with
Let's look at the 15th, because I heard somewhere that the monthly would be better to do the covered call, like when you're
you
like on
mean
a
like
monthly, yes, like
that?
on instead of a weekly.
It's about the same.
Yeah, that's crazy.
It's about the same. So you're working with a very, very strong company here, right?
Oh,
A
okay.
strong company. So let's just do for example here and
Okay.
say that we're going to sell the 195 call,
Okay, because yeah,
right? So
that's
the
close.
195, and we're going to pick up 32 cents on it.
Mm-hmm.
So 32 cents in real money is what? It's $32, right?
Right.
$32. And remember, we've got three of them. So going with our example here, we would pick up roughly just about under $100. Is that right?
Yes.
Yep, $96 to be precise. The thesis here is that in 34 days, because this expires on 15 September, in 34 days, we don't think the price of Apple is going to rise above 195.
Right.
195 is the strike price
Mm-hmm.
that we're picking. So 195, and that's the thesis. That's what we're thinking. So the way that you make money on this is, for as long as Apple stays below 195 in 34 days, then you get to keep all of that money. Is that right?
Yes.
But do you seriously think it's going to stay below 195 in 30
Seriously?
days?
No.
Nah. So you might actually lose it, right?
Right.
So you would want to do a covered call on something that you firmly believe that
Got it.
the price is not going to get there, or if it does, you don't mind selling it at that.
Right. I have a
Let's
question. I'm
Sure.
sorry.
Mm-hmm.
So if you sell it, let's say on Monday, and
Mm-hmm.
you don't wait for the expiration
Yep.
and you get out early, do
Mm-hmm.
you still get to keep the premium that you collected? No.
Well, we're going to look at that example
Oh, okay.
right next. So let's assume that we sold it for 195 at 32 cents. Best case scenario uh, is that today is September 15, and the price of Apple is well below, or even just below 195, as long as it doesn't close above 195.
Right.
So best case scenario is that we get to keep that money. It's called expiring worthless.
Okay.
right? What happened to that 32 cents? It decayed in value, right?
Mm-hmm.
It decayed so much such that, uh, by that time, it is no longer worth anything. That's best case scenario. Well, another scenario, not a bad case, but another scenario is that 32 cents has decayed sufficiently, and you are now suspecting that there's a likelihood that Apple is going to close above 195.
Right.
And you don't want to be forced to sell, because remember, when you sell, you give up the right. The person who's buying from you gets the right, but not the obligation. He gets the right to buy
Uh-huh.
to buy from you at that price. So if Apple goes above 195, it becomes very, very lucrative for him to buy it at the price that he locked in.
Right.
But if it does not go above 195, he's like, no, I'm not buying for more than what the market is offering. So
Right.
so let's assume that you don't know here, because we never do, right?
Mm-hmm.
And that 32 cents is now worth maybe 2 cents or 5 cents. What would you do? Would you close that position and buy it back for 5 cents, or would you let it go to expiration when you have a doubt?
When you have a doubt,
Mhm.
you would wait, ask your question again.
Okay,
I
so
mean,
you're trying to manage the risk here, right?
right.
To open the position, we sold at 32 cents. To close the position, we'd either have to let it expire worthless, meaning that 32 is now zero, or we can buy it back for anything less than 32 cents, and we would make the difference between 32 and whatever we buy it back for.
Right.
So I'm giving you some assumptions here, and let's say it's now worth 5 cents. You're not sure whether it's going to close above 195 or not. So what would be the way
Buy
to
it back.
you just buy it back at 5 cents, right?
Mm-hmm.
So now you have a strategy, and you would make a net of 32 minus 5, which is 27 times 3,
Got it.
because you had 3 contracts. So on a covered call, what you do, there's 2 strategies. One, you want to sell a strike where you believe that the price is not going to go to,
Mm-hmm.
right? And then you manage risk by looking at the price of the underlying. And as it approaches, if it approaches your strike, then you know that your position is being challenged,
Right.
right? So what the right thing to do would be to buy it back to close,
Right.
right? But what happened? Let's look at the scenario. What if today is September 15? You did not buy back your you did not buy back those contracts,
Right.
uh, and that 32 cents is actually now 50 cents.
Right.
What does it mean? It means the price went all the way up, hit your strike, and because you had sold when the price was well below 195, remember, as price of the underlying approaches the thing that you sold,
Mm-hmm.
the thing that you sold increases in value.
Right. And
Because
then
remember, when we sell something, we want price to go far away from it. Yeah.
right.
So this scenario we're looking at a possible scenario where price went up to 195 and closes above 195. Even if it's just 195 exactly, or 195 or one, broker is going to exercise you almost immediately, or the person who bought this from you is going to think they have a really great deal, and so they're going to exercise, right?
Right. And then
So
you
so what happens in that scenario? Do you understand what happens?
yeah, you lose not lose, but you gain the income,
Mm-hmm.
you lose your shares.
You don't
Right.
exactly lose the shares.
Well,
You're forced to sell your
right.
shares.
You're selling them for
So
the value of whatever the price is times 100, which you
yeah,
agreed to in the beginning.
exactly. And the strike that you're selling them at is what? 195, yeah?
Right.
So it's never a losing situation,
Got it.
right? In fact, what you're doing here is, maybe you in the beginning you felt that, I don't know whether this thing is actually going to go to 195. I saw it go to 198. You know what? I'm going to sell the 200 strike, right? I'm going to sell the
Mhm.
200 strike. and the 200 strike is actually going to give you what, $45 if you multiply 15 times 3, right?
Mm-hmm.
What you're saying in that scenario is that you're willing to sell your shares at $200. But if you're going to do that, you might as well give me, pay me $45 for it.
Got it.
Yeah. So since you have 300 and you bought 3 contracts at 15, then the person who you sold to would pay you that, $45.
Right. Plus.
And then if the price of Apple went way above 200, let's give a scenario and say it went over to $215.
Mm-hmm.
You would not benefit from that extra 15 on top of the 200 strike.
Got it.
But the person who bought it from you would benefit.
Right. Okay.
The way that you would benefit would be selling your shares at 200. And remember, you bought them at how much in the beginning?
150.
150. So your net profit here would be the 150, the difference between the 150 and 200.
Yes.
Multiply that by 300 and then add $45 that you sold, because you get to keep the premium. Yeah.
Right.
Your net profit would actually be 15,045.
Got it.
Deal or no deal?
Yes.
Deal.
Yes.
I think it's a deal. So don't be afraid to sell covered calls, but you have to do it kind of in a reasonable way.
Right.
You have to do it well. Yeah.
Yes. What would be, I know you said that this is a strong stock. That's why the premiums are low because to sell.
Yeah.
What would be a reasonable premium that you would suggest?
I would go for anything that is giving me at least $100 per contract.
Got it. Okay.
On a weekly basis. So the way that you would do this, let's say that this was a slow moving stock.
Mm-hmm.
Right? If it was a slow moving stock, then and it has weekly expirations.
Right.
Right. It means that I could possibly even let's say it's a one. This is still too low, I think. Let's try. What can I try?
Try something like XOXL.
XOS. Say XOSL. SOXL. SOXL. All right. So SOXL is a leveraged ETF.
Okay.
So let's and you bring another good point, and I'll talk about what leveraged here means. But we can still use it as an example, right?
Okay.
Let's first look at the chart. All over the place. We're going to pick a price here. Let's say $40. How about that? It hasn't seen 40 in a while. Let's see whether it has any money at $40, right?
Mm-hmm.
So at 40, I probably need to, I want to say actually it won't have any money in there. I'm pretty sure. Yeah. At 40, it has $0. But let's take another look here and say 32, maybe. 32 is 32, again, 0 point something, no money. It doesn't look like these things have a lot of money. And this might be telling us something. It might be telling us that there's a likelihood that the prices are going to go up.
Oh, okay.
Yeah. That's what I'm reading from this. We understand that when that's happening, when you're not able to sell that much, then likelihood this price is going to go up. So I wouldn't sell too close.
Okay.
It's at 21. Let's say 26. The 26 strike here would give us $20, right?
Right.
So in 2 weeks, in 13 days, if the price does not reach 26, I get to keep the $20. You with me?
Yes. Yes.
Yeah. SOXL, I started out by saying it's a leveraged ETF. What we know about leveraged is that it tries to outperform by as many times as their stated objective. In which case, for SOXL, the objective is to outperform by 3x. You see where in its name it says a direction shares ETF trust, daily
Okay.
second 3x, right? 3x, it means that if the market moves 1 point, then this is going to move 3 points.
Okay.
They're very, very aggressive. If the market goes down 1 point, they're going to move
Three.
down how much? 3 points.
Three. Got it.
So you either make a lot of money or you lose a lot of money very, very quickly.
Mm.
A leveraged ETF is not designed to be held for a long time.
Okay.
Do not hold a leveraged ETF for more than 2 or 3 days. It is not supposed to be held for even a week.
That's interesting.
No, well, it is the truth.
No, I know, but we
Yeah,
don't know this stuff. Thank you, Eddie.
you're welcome. You're welcome. So anything that has number one an X in it, not really an X. Yes, anything that has got 1x, 2x, 3x, that is called a leveraged ETF.
Okay.
Okay, some of them are inverse, some of them are positive. This one is a positive. This is a positive ETF, meaning that it's betting on the market going up and trying to outperform it 3 times. Do they manage to do that? The answer is yes, they do.
Mm-hmm.
Not always, but in general they do. But also it means that they're really quick to respond when the market goes down, say 10 points. This one is going
Right.
down. What?
Three
Um,
times.
30 points, or 3 times as much as whatever it's worth. So yeah, you have to have a really, really specific strategy when you're working with leveraged ETFs.
Okay.
Another example of a leveraged ETF, I think, is SOXX.
Okay.
SOXX is the iShares semiconductor ETF. Yeah, that might be it. Yeah, this company iShares does make quite a few leveraged ETFs.
Okay.
You just have to understand what that means and how to trade that. So,
Mm.
and that's another thing that maybe some people ignore. They don't necessarily understand what this stock represents. It's very
Right.
easy to look at Apple. We don't all know Apple, right? So Apple is software company, whatever. We know what they do. Some of the other common ETFs like SPY. We know what SPY is all about. It's uh, trying to perform the same way as the S&P 500. But some of these other ETFs that are not so common, like the SOXL, which is leveraged, or I'm trying to think of another leveraged ETFs. Maybe I should Google here. Just so that we can have some good example. Leveraged ETF. Yep, this is a good list here. I'm going to share here my screen here in a second. All right. So I just Googled, and I should have gone straight to etfdb.com and looked for leveraged ETF equity list. And we can see some of them like TQQQ. We all know QQQ, right?
Yes.
QQQ is that ETF that tracks technology stocks. It does really, really, really well. Now, if you want to outperform the QQQ, you don't buy QQQ, you buy TQQQ.
Okay.
It tries to leverage it 3 times, right? Year to
Yes.
date, it has done 132%. Is that good or is that good?
That's great.
I think it's good. It's great. Yeah. Yeah. But that's only if you got in at the very bottom and went all the way up, right? It assumes you buy and hold, but you do not. You should not. SOXL, actually second on the list right there.
Wow.
3x. And these are very, very highly traded instruments. So SPXL is another very, very common one. This one tries to outperform the S&P by 3 times, and so on and so forth. All these are positive ETFs, meaning that go up. Yeah, let's see whether they have one for negative ETFs or inverse ETFs. Inverse ETF. Inverse ETFs. Let's try and look. All right. So if you want to bet against the QQQ again, you want to outperform when QQQ is going down, and you want to do like 3 times, you buy the SQQQ. You see that?
Yes.
Now you're starting to learn how to do these things.
Wow.
The SOXL was when you're going up. When you're going down, it's the SOXS.
Okay. Yes.
Right? So here's a homework for you. Go learn about ETFs and how to make money on different types of ETFs.
Great.
Yeah, don't just an ETF, just by any other name is not necessarily an ETF. Sounds good?
Yes. And this website,
etfdb.com. It's a brand new website. They built it last night.
Okay. You were up working on it. db.com. Thanks.
Yeah. So very good. Very good.
Great. Thank you so much.
Sure, no problem. You are welcome. What was the original question?
We were
covered calls is what we're
a good example of that.
Yeah. Okay. So yeah, that's what
thinking that the market is going to go up because we can't find a good.
Yeah. I think the market right now is poised to turn around. It's pulling back. It's creating buying opportunities. I think it is taking care of business in terms of some of those gaps that we have seen in the recent past. I'm looking at my what is it called here? Trading View. Does anybody work with Trading View here? I work with it a lot. Yeah,
but I haven't been using it as much.
Okay. If you have the Thinkorswim platform, you already have the best. But Trading View is pretty good.
A lot of people like the Trading View.
I do like it, yeah. Especially for people outside of the country who do not have Thinkorswim, which is the majority of people. They use Trading View. Yeah. So, what did I want to see here? I wanted to see
how the market is moving.
Yep. So you can see that obviously 4,800 was where we hit the highs sometime in January of last year. Wow, it's been a year since we touched that. It's very uncommon. It's very uncommon. But there's a likelihood that we will try and achieve those levels again. Right? It's very, very likely we're going to try and achieve those levels again. So based on that, we're just taking care of some business here. Are you seeing my pointer down here? So some of these gaps need to be closed. What we know about the S&P 500 or SPX is that they don't like to leave any gaps open. Yeah. So we're probably taking care of that. This week we had some CPI numbers come up. They came in, red, not very pleasing, and the market is saying, "Yeah, we didn't like that." Obviously, they will look for anything to sell. Yeah, it's not that who cares about CPI? Maybe some people do, but in general, the market is very, very subjective, and it just depends on what one hedge fund manager thinks or a couple banks, and let's sell. Yeah, let's sell. But it is not reflective of the true sentiment of the CPI. So I think that we're just taking care of some business before we start going back up, right? So if we do some projections here and, think maybe, do we think we could start seeing 4,700 if we follow that trajectory?
Yes.
I think so. I think we can. When? I'd like to give you a date, but can't do it. Yeah.
Yeah.
But we can see 4,700, maybe 4,800 in a few months, but 4,700 is not that far off. We were at 4,600 just about a week ago. So I would, if I was to buy on a longer term, I'd really go out even beyond the 45 to 90 days that we normally speak of.
Okay.
Say that I think we're gonna, market is gonna go up, just not right now, not in the next 1 or 2 months. So if I was buying a leap, you understand what a leap is, right?
Yes.
If I was buying one of those long-term expiration contracts, I'd go, minimum 18 months.
Oh, okay.
Minimum 18 months. So that's actually what I teach. When I teach about leaps, I teach you need to go no less than 18 months and then get rid of it in about 6 to 9 months. Yeah.
Okay.
You're buying time.
Right.
And if in 6 months it has not doubled, then maybe it wasn't such a great leap.
Right.
Yeah. And then don't spend more than 3,000 to 5,000 on those things. So cool.
Yes.
Yeah. Reset, and I guess I could remove this once I figure out how to remove that. Push delete. Yeah. Cool. What other questions do we have?
I think I'm set. I will give somebody else a chance.
Well, thanks for those questions. They give us some topics. So
Thank you.
welcome. And welcome a few new people. Let's see. Mia is new. Jennifer is. I don't think Jennifer is new. Latonya Barnes. Name sounds familiar. How you doing, Miss Barnes?
I am doing good. I'm a part of Terry Ijeoma, so that's
Okay.
how I'm familiar to you.
Got it. Yeah, that's probably why I've seen the name. So
Yeah.
everything good? You doing well?
Yeah, I'm doing good. Just
All right.
trying to master, we'll get better at this process of
Yeah.
selling options. Yeah.
What are you trading these days?
I just haven't been just kind of gun shy of jumping in. So yeah, I haven't been doing anything here
Yeah.
lately.
Got it.
Yeah.
Yeah, a lot of people have been holding back. I'm hearing that a lot. Myself included. One of the
Mm-hmm.
ways to trade in this environment where you don't know, and again, it depends on what you trade on a regular basis. But I find myself selling more and more premium.
Mm-hmm.
Right. So selling premium is that art where, or that science, I don't know whether it's an art or a science, where you're trying to project where, the magic keywords here, where price is not going to go, right?
Okay.
So since, we've been kind of consolidating on a lot of things, you're trying to figure out where that higher boundary is.
Mm-hmm.
Right? When the market sentiment is that it's going to cool off, then you won't be selling calls. You won't be selling calls. Calls means that you're expecting price to trend below or up to that point, but not above it.
Right.
When you do options, what do you do? When you sell or buy, what
I
symbol?
don't do, I haven't really started doing verticals. I'm not understanding that. So I just do calls and puts.
All right. And
Yeah.
what do you buy calls and puts on?
Let's see. NVIDIA is one that I like to trade.
Yeah.
And
Yeah. So yeah, NVIDIA is one of those. It's a pretty strong company. They've got some two letters associated with them that make them that worth. You know those two letters.
no, I don't.
One starts with an A. The other one's an I. Walk with me here,
AI.
Latonya. Yeah,
Help me out, Eddie.
walk with me here, Latonya. AI. Anything,
Oh,
any
AI.
company.
Okay, gotcha, gotcha.
Yeah,
Yes.
any
Okay.
company that has AI associated with them is
That's
going
true.
is going to the moon, right? And these are the
Gotcha.
one these are the trailblazers here,
Yeah, true.
or the pathfinders, I should say. I think they're the pathfinders, not the trail. Yeah. So NVIDIA is good. It's starting to cool off a little bit, but it's still red hot. So would I sell against it? Not really. There's a thing about selling against really good companies. It's not a good idea generally because it's synonymous with betting against that company.
Right. I agree.
Yeah. So if you're betting against a good, strong company, especially one that just hit $1 trillion like NVIDIA, then it's a bad idea.
Agreed.
Yeah. So it doesn't mean that you cannot sell. It just means that if you sell, maybe protect yourself. So that's where, a spread would be. And you said you're not into spreads yet, right?
No, I'm not.
If you come over to my school, I can help you out, right?
Oh, where's your school?
Options with Eddie. Glad you asked.
Okay. I will definitely do that.
Latonya, you don't know about my school?
I do. This is the first time I've jumped in though.
Okay. All right. Yeah. At Options with Eddie, we'll teach you how to make more than $1.
All right. That's what I'm looking for.
Well, you come on over. Come on over.
And it's
We'll
every
help you.
Saturday?
No, it is the Saturday is just me chit-chatting with old friends and
Okay.
Q&A, but it's twice a week, Monday, Wednesday, and you sign up at optionswitheddie.com.
Okay, so it came through on my Facebook, and that's how I found this
Exactly.
to jump in today. Yeah.
Yeah. Yep.
So Mondays and Wednesdays?
Mondays and Wednesday, it's a paid class. So just go to optionswitheddie.com and you will get as much information there as you. Let's see whether I can bring it up here.
Okay.
Yep. Let's go to that website and learn all about it.
All right, perfect. Thank you.
Sounds good. All right, great. Cool. All right. Well, if there are no more questions, then let's see. Really? We're going to be done in 43 minutes? I'm impressed.
I have a quick question, Eddie.
Sure.
I've only recently, maybe in the last year, started looking at the Forex calendar. Is it because we are, or I don't know where we are, if we're in a recession, if we're coming out of the recession, I don't know, but there seemed to be a lot of meetings and red folder days and all that. Is that typical, or is that just because of the volatility or instability that we're experiencing now?
No, that's just a regular week at the office.
Oh, okay.
Yeah. So Barbara is referring to forexfactory.com. And this is where we go look for the red folders and all that kind of folders, et cetera, et cetera. But no, this is normal. That's what the Fed does. If they were not doing any of these, I'd be a little concerned that my money is not being spent well. I pay the Fed, right?
Yeah.
You probably pay them too.
Yeah, we do.
Yeah, but this is just a regular day at the office. So this is macroeconomics. And these guys wake up in the morning. This is all they do. They go to work. They talk about stuff. Every once in a while, they open their mouths. They pick up a microphone and the market moves. Yeah?
Yeah.
So what are we concerned about when we're looking at this calendar or this thing? This thing was actually built for people who trade Forex, right? Forex pairs. If you go to your Thinkorswim, you're going to see one of the tabs there called pairs trading, right? We'll talk about that one of these defined days. But if you're a pairs trader, meaning that you trade, for example, the USD and the Japanese yen or the euro or something like that, this is one of your popular websites because it gives you information about what's happening and how it affects the market. Well, Forex also affects the stock market, the New York Stock Exchange and all that good stuff. So we are mostly concerned with what's happening in the US. Right, Forex is traded globally, worldwide, but we don't trade. Or I guess you could trade worldwide as well, but we are only concerned with the American market. So what we do is we filter. You watch my screen over here, Barbara?
Yes.
So I will click filter, and I'm not interested in any of these. So first, I'm going to click none, And then I'm just going to click on USD, and that's all I'm interested in, and push apply filter. Now I can see that on Monday, there's zilch, nothing. It means that I can go to town on on the stock market. Will I do that? I don't know about that. And I can advance in the calendar on August 15. I can see that we have the core retail sales month over month, the Empire State Manufacturing Index, and the retail, all of these before the market opens. By the way, this time that you see here, I have set mine to the Eastern time zone. Mm-hmm. And this is important because you want to look at this information relative to the regular trading hours. So regular trading hours are 9:30 to 4 o'clock. Anything that happens between those times, very, very important. If it happens before the market opens, then it gives us some insight, or we can take advantage if you're trading futures, right? Mm-hmm. For trading futures. And in my class, we'll talk about how that affects in the morning, what we're going to do that day. But for example, now that you know that it's a red folder, is it enough just to see that it's red? You need to understand what it is representing. Does that make sense?
Yes.
So you want to understand what is the core retail sales month over month. What does that mean? Why is it red? You can get some additional detail, and it will give you, some brief synopsis. It's a change in the total sales of value, total value of sales at the retail level, excluding cars and stuff like that. But you want to pay attention to what this usual effect. Actual means it's good for currency. Substitute the word currency with stock.
Okay.
Right? That's one clue. Not always the case, though, because we have seen in many, many instances in 2023 and 2022 where this statement was actually opposite. And that's because we were expecting different results. So bad was good, good was bad. I don't know whether that makes sense. Bad was good. Let me give an example. Inflation going down is a good thing, right?
Right.
The market was actually responding differently because that meant that the Fed was going to do something. Or inflation going up is a bad thing. But if the Fed, reduced the rates, that would be a good thing. But did he do that? No. In fact, he went ahead and increased rates by 5.25% over the last 2.5 years. Unemployment rates, for instance, when the unemployment went down, that's supposed to be a good thing. Is that right? Means
unemployment
less people
down. Yes.
Yeah. It's supposed to be a good thing. It means that more people are employed, right? Fewer people are out of work. But the market was translating that as, oh my goodness, the Fed is now going to try and increase the lending rate because the unemployment numbers are too good, right? The American economy is kind of crazy. High unemployment, good for good for us. Low unemployment, not so hot, not so good. Here in Georgia, we have one of the lowest unemployment rates. One of the lowest. You try and hire somebody, nobody wants to work. Too much money in the market. So just understand what this macroeconomics means, and you can flip through as far as you want. Usually on the weekends, there's nothing happening. So understand this. Sounds good?
Yes. Now, sometimes, though, when it's not a speaker, for example, these are just reports then, I guess. And where are they actually published? Because it seems that, so let's say it's scheduled for, I don't know, let's say 9:15, and it seems like CNBC already has the headline at like 9:17 or something. So who's getting access to this? Who needs access to it? And what do we do, our retail traders? Because it looks like however it was going to affect the market, it affects it really, really quickly.
Yeah, it does. So you can view these reports as they are being revealed. So CNBC is one of them. MSNBC is another one. CNN, maybe not CNN. Fox Business. If you have Fox Business, that's another place that you can watch them live, or you can just go to the Fed website and watch it live from there. It's public information, no cost, right?
I guess I'm saying I don't necessarily want to, because I probably would understand it anyway. And I guess I'm just more looking at the time of whatever the event is. And I feel like whatever, however it's going to affect the market, it's already done it by the time,
Yes.
it opens. So
exactly, because it happens pre-market. Now, for the ones that happen, say at 2:00 p.m., most of them are 2:00. That's when they announce the rates, for instance. And you see one of the chairmen of one of the chairmans, one of the chairs of the Fed is going to be saying something significant. At that time, the market will start responding even a few minutes, because the news has leaked somehow. And when they finish speaking, the most important point, or the most important time, is actually the comments, the Q&A, right? I say that for fact because, for example, when Fed Chairman Powell releases the rates, we already knew what he's going to release the rates to way in advance. But what's important is, what is he going to say about it, right? What he thinks is super important. Powell, by the way, if you've been trading for a while, then you would know that whatever he says is very, very important. Yeah. Another person that used to be super, super important was Yellen, right? Yellen was important. One of the other Fed chairs that I knew, actually, when I started trading, the Fed chairman was Alan Greenspan. Anybody remember Alan Greenspan? Yeah, Alan Greenspan. Whatever Alan said, when he opened his, when he stepped to the mic, and he's got this big smile. By the way, he's a Georgia guy, so I like him too. But whatever he said, people just leaned on to that, and the markets would move 20 points, 30 points. Back then it was, 20 points was that was a lot. Now it can move even 80 or 100. But anyway, to cut a long story short, pay attention to that. The best advice, or the best thing to do when these events are happening, is don't trade. On that day, don't trade. Wait for the dust to settle. Wait for the news to be digested, the analysts to come back and tell us what they said, because it's all very subjective. It just depends on how you understand it, how I understand it, and how the next guy understands it. So, sounds good? Let's see. Inez, you have a hand raised. Are you just saying hi? You have a question?
No, can you hear me?
I can, yes.
Thank God. Eddie,
Yes.
I like scalping SPX.
Okay.
When I am scalping in the morning, is it best to purchase with a market order or a limit?
I almost never get in with a market order. And I understand that sometimes you might put a limit order and it won't get picked up, and therefore you're going to miss that opportunity. And I think that's the fear. That's what's driving that question. Is that right?
Yes, sir. Okay,
I'm very familiar with it. So when scalping, by the way, for those who are wondering what that means, it's that scenario where you're trying to get in and out in just a few minutes, and you're trading the S&P 500. I would just go in with a limit order, and if I don't get picked up, meaning that my order does not get filled, then I will have a new decision to make. That new decision will be, will I chase it or not? Right? Chasing means that I'm going to be willing to pay a little bit more because I still believe the thesis is still correct for the direction. It's a very directional trade, by the way, because when you're scalping S&P 500, you're either buying calls or puts. What I wouldn't do is use a market order. It can be disastrous. And the reason for that is you might have an order way below, and guess what's going to happen? It's just going to get picked up, right?
Mm-hmm.
Yeah. Now, I would use a market order to get out if and only if I felt that my position was no longer tenable and that I I felt it's just unsustainable. I want to get out, want to get out now. So here's what you could probably do here. You're familiar with bracket orders, right?
Yes.
Yeah. Do you and I know you know how to use bracket orders. You and I have gone through this before, but
Right.
I would go for those bracket orders and actually use that to my advantage, right?
Okay.
One thing you have to learn though is what the expected price, expected open is going to be, expected direction, and you can almost even figure out where the price is going to be of the strikes once the market opens.
Okay. Thank you.
You know how to estimate that?
No.
All right. Thursday, come over to the Power Morning.
Okay.
Yep, and we'll go over that. Remind me if I don't remember. But yeah, we talk about that every Thursday morning. We project where S&P is going to open. We project what strikes we're going to be working with at the money, because we never buy out of the money. It's always in the money or slightly in the money. We've worked it out to where we know within a few $100 how much it's going to cost.
So Thursday morning, what, 6:30?
Your time 6 o'clock, my time 9 o'clock
Okay.
Eastern time.
And would there be like help me out, an email? How would I connect?
Tell you
Zoom?
what, how about I hit you on the side and I'll send you some details.
Thank you so much. Appreciate that.
Not a problem.
Okay.
Yeah, you're part of the alumni. You should be coming to those meetings if you like.
Thank you. Appreciate it.
Sure.
Bye-bye.
Awesome. Oh, Wami can hook you up. Wami can send you some information. Right, Wami? That's my partner in crime. She listening? Nope. Okay. All right. Yep, it's about 12 o'clock. By the way, though, guys, I forgot to make that announcement today. I mean that this is for educational purposes only. So if you're listening here or watching for the first time, just understand that this is not financial advice, right? Everything you do, when you try it, you need to double check my statements, double check the statements of the person next to you giving you that advice. Make sure that decision is yours, and that you fully understand it. If you don't understand it, there's two things to do. You can either, number one, not do it, which is the right thing. Number two, if you do it, make sure that you're in a sim environment or paper trading, somewhere where you can test a demo, understand it. Once you've done enough practice, then you can go live. Sounds good? All right. I am done for the day. It is now about 12 o'clock. So are there any other questions before we head out? No other questions. All right, we have a class coming up in a couple of weeks. If you have not signed up, now is a good time to sign up before prices go up. They will go up. So I'm going to put in the website here, optionswitheddie.com. I think I typed it correctly, optionswitheddie.com, just like it sounds. And you can get more information, sign up. You can contact me. You can discover whether this is a good fit, even if you've been trading for a long time or you want to polish up. Let's find out. All right. Right, everyone. Adios. We'll see you in a couple.
Thank you.
Thank you.
Right.
Thank you.
Adios. Good night.
Bye.